Hello, everyone, and welcome to another episode of Coffee with Carl. I'm your host, Carl Zellner. I'm one of the attorneys with Anderson Business Advisors, and today I want to talk a little bit about where you earn or where to earn. So, we want to talk about some of the different scenarios. And really, this comes from doing any sort of even very basic tax planning with any clients. As many of you know who are familiar with Anderson Advisors, we're not only a law firm, we're also a tax firm as well. So, as you can imagine, there's a lot of cross strategizing that goes on within our business. So, I think it's important to talk about one of the basics here of really if you're running your own business or you have investments, you can choose in most cases where you earn or bring in that income. And it can really make a difference to your overall strategy and your overall tax burden on an annual basis to look at those things. So let's talk about a couple of the options here. Sometimes when we look at where do we want to earn, there is a prescribed place to earn. So when I start talking about things like wholesaling, or if we're looking at the real estate side of what we're doing here, if we're talking about flipping, then it's prescribed that we should earn in our corporation. The main focus at that level is we don't want to be tagged as a dealer in real estate because it comes along with some pretty unsavory pieces of the tax code. So we don't want to be tagged as a dealer, and a corporation is exempt from dealer status. So there's a nice clear path on how we should take or earn our income in regards to our active investments in real estates. Other things are less clear. If we start looking at lending, perhaps, maybe it makes sense to loan out of my corporation if I have a substantial reimbursement burden I'm trying to overcome, or I have lots of losses in my corporation where I can afford to earn, and there's some additional reimbursements there as well, and I'm just trying to generate a little extra cash flow. I can do it in the corporation. It's a great fit. Now, if my reimbursements are all burned up and I don't have a lot of deductions left, then it probably doesn't make sense to earn my lending income in my corporation, unless once again I'm forced to because it's my active business or my entity's business that is lending, then I may have to. But generally that income that comes from interest income is passive. So I can run that through my corporation if I choose, or my holding company, or an LLC that may be disregarded to me or taxed as a partnership depending on your strategy. So we have the ability to choose in several different investment areas where is the best place to invest, where do I want to recognize that income. We can even extend it so far as to talk about investment opportunities in, say, your retirement plans. Okay, there's some pretty significant differences between IRAs and 401ks if we start looking at investing flexibility, as well as risk of loss, the ability to use debt, items like that. So depending on what my strategy is, maybe what period of time I'm at in my life, am I in a high tax bracket? It could be you want that income to land in a retirement account. Or if you already have money funded to that retirement account, it may make sense to invest with it. So, like I said, really the purpose of the video today was I wanted to chat a little bit about where you can choose for your income to fall and where you may want it to be. And if you don't know or you're feeling a little bit of confusion here, I would suggest setting up a tax consulting appointment so we can help you do some planning so that you're not asking that question at the end of the year. You have the choice, but really the value when it comes to taxes is in the planning. The prep, not so much. So we want to take advantage of the planning so we can choose where that income falls so it can be part of our larger overall strategy. From my perspective and from Anderson's perspective, if you're only dealing with the liability side of what you're doing or only dealing with the tax side of what you're doing, you're missing half of the equation. So we put them all together under one roof, come up with great strategies, and as always, we want you all to take advantage of all of our free content out there. So I'd encourage everybody to join us for a class. If you're not yet a client, make sure you're taking advantage of our free consultation we offer from one of our great advisors. And until next time, thanks for joining us with Coffee with Carl. And don't forget, take advantage of all of our free content out there. We put it out there so to help you all learn. Thanks, everyone.